And Gaurang Shah is joining us on the show. Gaurang, great to have you in the studios as always.
Thank you.
Turned out to be a very different Monday than what we were sort of fearing when we were looking at the screens on Saturday and Sunday. But how do you rate today's rally and the fact that we've had this 1% up?
Well, a fantastic recovery, honestly speaking, because we got this news over the weekend and there are all sorts of assumptions and statements being made. But good to see the kind of recovery. Domestic guys bought in more than 700 crores and foreigners sold more than 300 crores. So where do we go from here? That is a big question mark, Surabhi. And as we were just listening in, sense is that as we approach 23rd, volatility will be high. We would possibly correct. We'll see some selling pressure, some nervousness. Yes, that swing is favoring that UK should remain in the Eurozone. But it is not done until it is done. So my sense is that unless we have the event done and dusted and the referendum in favor of UK staying in the Eurozone, we can't take anything for granted. That's what I feel personally. So, and in case if there is, any unpleasant issues that prop up, from a long-term point of view, I would definitely go ahead and say that you get dips, you should definitely go and buy India.
Okay, that's the call. Let's also get in a quick roundup of all the money market action that we've seen. The rupee, of course, took it on the chin, especially in the morning trades as Governor Rajan's exit shook Mint Street. The rupee then recovered a lot of that lost ground, finally ended around 22 paise weaker. The level was around 67.30 thereabouts towards the close. So that's what I'm talking about. So a bit of a recovery coming in from the lows. Same for the benchmark bond as well, because bond prices also managed to recover. The yield went to a low, touched a low of about 7 point, or rather a high of 7.55. And then that was, of course, a level that we last saw in March and then later recovered. And finally, what we've seen is actually a positive close. I mean, 7.49 was the close compared to Friday's close of 7.5. That was the performance in the bond market. Now, this is, of course, short term, but what happens as we get into the next couple of weeks? We've got Ashutosh Raina joining in. He's head of Forex trading at HDFC Bank. Thanks so much, Mr. Raina, for being with us on the show today. So today, of course, there was a lot of talk about, obviously, some central bank support that came in, some dollar sales, etc. What are you expecting in the currency markets in the days to come?
Yeah, see, today's move was on the expected lines. It opened weaker and then got supported. I think some central bank intervention was definitely there, which helped to recover from the lows of the day. I think the trend should continue and we should see it in a range as it has been off late. The dollar rupee has been in a very tight range and it should continue to be in that range going forward also.
So you don't expect any sort of immediate term weakness over the next couple of days because of a lot of concerns that have been discussed over the last, over the weekend?
No, the concerns are fair enough, but we should not discount the fact that RBI is in a very strong position as of now. The war chest is very strong and it has a capability to take on the volatility and reduce the volatility.
Sure.
So we should not expect it to weaken so much, although it may weaken from the current due to the global factors that may occur going ahead.
What's the call on the benchmark yield? How do you expect that to behave in trade? I mean, I believe, one view was that there's a lot of OMO that's still going on, so that should also support bond prices.
Yeah, OMOs are going to continue going ahead also because as Dr. Rajan had also said, that the liquidity has to be brought to the neutral level. So OMOs are the only ways by which liquidity can be brought to the neutral level. So they will continue and bond yields will be supported because these are the best yields available globally at the moment.
All right, we leave it on that note. Thanks so much for joining in. Gaurang, very quickly, I mean, what next for the equity market? The monsoons have come in, so that's one less worry to deal with. After Thursday, there'll be one less worry in the form of BREXIT remain to deal with as well. Does this market have what it takes to make a decisive move above 8,300?
Well, I would say that if UK stays, we would definitely having much more higher levels than 8,300 Surabhi. And not to forget, we've been to these levels. Today, the recovery was quite comforting and it adds to the confidence with the kind of news flow that we had. And not to forget, with the negative news flows, we had positive news flows in form of FDI coming through. So my sense is that more momentum, more tailwind in form of GST, etc. working out. And of course, the monsoon being favorable. My sense is that 8,300 is a very near-term mark that we are speaking about. We might as well go beyond those levels.
Okay.